What's going on, people? Welcome back to my channel. For those who don't know, my name is Jamie, and on this channel we talk about property, investing and personal finance. Now, you may have seen a recent video which I did with Kurt's the Accountant where we discussed our mistakes as beginners investing in the stock market, and I really want to try and continue that conversation about normalizing talking about money and talking about investing. So today, I'm going to be sharing with you my Trading 212 portfolio, discussing all the shares and stocks which I've been investing in over the past 6 months. Before we start, I just want to caveat that I am not a financial advisor. This is just my opinion and experiences on investing in the stock market. So do take that with a pinch of salt before you then go on to invest your own money in the stock market. So here is an overview of my Trading 212 portfolio, and as you can see, over the last 6 months I've invested over £400 and have seen a 10% return on my investment, which I am very, very pleased with. Each month I put away a certain amount of money, a small amount of money, only £25, which I then use to invest in Trading 212, buying stocks and shares, and any additional amount of money which I'm left over at the end of the month, I would then reinvest into buying more stocks and shares in Trading 212. So as you can see, not a massive amount of money, but I think it's really important to kind of get into a good habit of putting away that money to invest in stocks. And as you can see from the graph, there's lots of fluctuations where my portfolio is going up and down, and you'll see around November there's a big spike in my portfolio going up, which I was very pleased about, and that was mainly due to Rolls-Royce. So there's been plenty of coverage in the media about Rolls-Royce and the impact that coronavirus has had on the company. This has led to thousands of jobs across the company being cut and the share price hitting an all-time low, plummeting from £6 per share in March before we kind of understood the true impact of the coronavirus pandemic to an all-time low of 74 pence in November. Now, this was very, very bad news if you were a shareholder in Rolls-Royce at the time, but if you're a new investor like I am, this is a potential opportunity for you to buy shares at a low price. And that's exactly what I did. I took advantage of that, and in November I bought 13 shares. I think there was around £1.13 per share. And in November, the company actually issued a rights offering, which is basically gives rights holders, so the people who currently own the stock, opportunity to purchase additional stock at a reduced rate. This is to help the company raise funds in order to bolster their balance sheets after the massive impact in which coronavirus has had on the company. So for every 3 shares which I owned at the time, I could purchase an additional 10 shares at a reduced rate of 32 pence. Yes, 32 pence. So essentially I bought 46 shares for less than £15, which is an absolute bargain. Buying these shares at 32 pence has allowed me to decrease my pound cost averaging to around 75 pence per share, and has resulted in my shares in Rolls-Royce being up 56% overall. And that, as you can see, has had a massive impact on my overall portfolio. CocaCola is a stock which I've been invested in quite often more recently, and makes up over 28% of my overall portfolio. They have really strong fundamentals and have been making profits over the last couple of years, as well as paying their shareholders dividend payments. So the more stocks I own, the more passive income I will be able to generate through dividend payments. Similarly, why can't I say similarly? Similarly, I can't say it now. Similarly with AT&T, who are a telephone communications company in the US, they have really strong fundamentals. They've been making profits over the last couple of years and have a high dividend yield of around 7%. Astrazeneca was a share which I received after referring someone to the Trading 212 platform, and this share came in at around £85, which was a free share. So I was absolutely buzzing when I received this, and obviously the person who I referred to received this to their portfolio as well. And Under Armour as well, that's been one of my top performing shares. I was going to sell it when I first received it as a referral, but I decided to keep it for the long run, and that is up 32%. So I'm very happy with that. So make sure if you're interested in getting involved, you look at the referrals, because it's free money at the end of the day. You could get a free share worth up to £100. So during the summer, I also invested in Barclays because I wanted to kind of diversify my portfolio. And at the time, the obviously banks and financial organizations weren't doing too well. So I thought it would be a good time to start investing in that. And that is now up 28% and showing signs of recovery. So a good share to have, but I don't believe there's any dividend payments with Barclays. So I will be kind of holding on to that for the long run, with the hopes that it will increase over time. Now, you'll also see my portfolio that I've invested in blue chip stocks such as Apple and Amazon, a very, very small amount. And you'll see from my Amazon shares that I own 0.019 fraction of a share, which is ridiculous, which you can do on Trading 212, which is a kind of positive of the platform. You can purchase fractions of shares, but they're so expensive, and their dividend yields, particularly Apple, are very low, and Amazon, they don't offer any dividend payments. So I decided to park kind of those shares for now and started investing more in dividend paying stocks such as CocaCola, AT&T and Unilever. Is it Unilever or Unilever? Lever. Unilever is a consumer goods company who manufacture food and personal care products, and I can only see this kind of industry doing well, particularly in the coronavirus kind of pandemic phase and beyond, because essentially everyone needs to eat and everyone needs to shower, right? So I decided to invest in them, and their dividend yield is really, really strong as well. So I bought half a share in Unilever at around £44 per share, and I'm planning on investing more into this stock in the near future. And that's my overall portfolio. So I hope you found that interesting, looking at kind of some of the stocks and shares which I'm investing in. And yeah, I'm really pleased with where it's at the minute. I know I'm investing a small amount of money and my overall portfolio is relatively small, but if you consider if I had that money in a savings account earning, let's say 1% at best, my money is best placed where it is at the minute, giving me a return of 10%, which I'm very, very happy with. I'm also considering in the new year, obviously increasing the amount of money which I'm investing each month into my Trading 212 portfolio, but I'm also thinking about investing in a mutual fund as well. So I'll keep you up to date on that progress as we go along. And as I mentioned before, if you're interested in getting involved in Trading 212, please have a look at my referral code in the description below, where we can both earn a free share of up to £100. So it's a win-win for everyone. You get a share, I get a share, and we're increasing our overall portfolio. So make sure you check that out. But once again, thank you so much for watching this video. I really appreciate your support. Before you leave, make sure you drop me a like, drop me a comment. I would love to kind of understand the stocks and shares in which you're investing in within your portfolio. So let's start that conversation in the comment section below. And if you haven't already, make sure you subscribe to my channel to stay up to date on all the latest content. But for now, thank you again, and I'll see you again next time.